show, which is that tomorrow is a holiday.
Absolutely, right? We're all very excited that tomorrow is a holiday. We come back on Friday. We'll be prepping for the budget, but then we go into a weekend again. But we've got so much to track on the show, right? A flurry of earnings in the mid-cap end. So let's invite South Indian Bank. The bank posted its third quarter numbers with slippages at an 8-quarter low and interest margins the best that we've seen in the last 31 quarters. Murali Ramakrishnan, the MD and CEO at South Indian Bank, is now with us on the show now. Mr. Ramakrishnan, morning. Rima here. Do you think you will be able to sustain NIMs at these levels? Because as deposit repricing takes place, NIMs are expected to come under pressure. Could you give us an indication on your outlook on NIMs? How long do you think it will sustain? When do you think it will start declining? And to what extent can we see a decline in NIMs?
Good morning. This was the same question I think we had when we were actually meeting up during Q2 results. So that time also, if you recall, the repo rates have started moving up for quite some time, and it's moved up by almost 2.25%. So clearly there was a debate about how this will be impacting banks and how this will be impacting specifically our own bank. At that time also, I remember telling that as a bank, we should be continuously monitoring the NIM, and we should be continuously monitoring the rate at which we raise our liabilities and the rate at which we price our assets. So I'm happy to say that we are continuing to be doing quite well on this front. And if I were to really look at my cost of deposit, has gone up only by 4 basis points compared to what I had in Q2. And overall, the NIM, as you can see, is the best ever NIM we have had. And I gave a guideline of 3.2% by March, and I'm happy to say that we are pretty much near that even now. 3.17 is my NIM as I'm talking to you today.
Mr. Ramakrishnan, good morning. Surabhi here. So that's on margins. I just want to get your take on asset quality. Slippages have been declining. But if I look at the gross NPA level, that's, still some would argue on the higher side at 5% plus. What are you seeing on asset quality and what are you seeing on the recovery front? Your watch list has been coming down as well. The restructured book has been coming down. So just give us some more color and contours within asset quality and what we can expect, say, over the next 1 or 2 quarters.
Yeah, sure. If you recall, I took charge from October 2020. That's when we started actually building the new book, and we had to completely rehash the way by which we were streamlining all our products and businesses. So I'm happy to say that from October 2020 to December 22, we have added 37,000 crores of new book, in which my NPA is 0.06%. So what I'm trying to do is I'm actually adding high quality new book, which I've been doing not now for over the last 9 quarters. And we have been continuously working on correcting the past not so good quality book. That's where you should see our collection and recovery efforts. We have done a fantastic job in terms of recovery and collections. Just to give you some numbers, as of March 21, we collected and upgraded about 600 crores. The year ended March 22, we collected and upgraded about 1,500 crores. And in the year end, likely to end by March 23, we are expecting it to surpass even 1,500 crores by a good margin. So overall, I would say the strategy is to clean up the past book and continuously add a very high quality new book, so that overall you will see the provisioning coming down and down, and you can see the contribution of provisioning from the new book is hardly anything.
Sure. So, Mr. Ramakrishnan, completely take your point that obviously, since you've taken on, as you're saying, obviously you're building a much cleaner and healthier book, but shareholders will look at the aggregate at the end of the day, right? So, some guidance perhaps on you're at around 5.5% gross NPA. Are you looking to come down to, let's say, 4.5%, at least reduction by what, 50, 100 basis points in the next 6 months?
Good point. I've been giving a guidance of closer to 5% by March end, and net NPA of closer to 2% by March 2023. And I'm sure as we go forward, we are looking at much better numbers as we pan out for the next year, because by then the complete most of the new book would be actually predominantly be present in my portfolio. To that extent, you will see the percentage also coming down. But it's a game which we need to have patience. Because as you know, the recovery and collection from the book, which has been built over long years, will not come down overnight, and we will have to continuously keep increasing our recovery and collection efforts. At the same time, not letting any more new addition of bad loans to come in. So this is a process, and this process will take its time. I'm happy to say that it's come down from as high as my GNPA. If you were to look at some of the past quarters, my GNPA used to be as high as 8%. 8% to 5.448 is what you're seeing now. So 5.48 will come closer to 5 by March, and obviously it will go to sub 5 closer towards a 4.5% and 4% in the next full year. So that's how we are planning to bring down the overall NPA numbers.
Right, that is on the asset quality. Thanks for joining us, Mr. Ramakrishnan. This is Pavitra. On the loan growth, that's looking quite good this time around. It's at, almost 20%. But if I look at the past few quarters, there's been a lot of fluctuation. Can you tell us what is a good loan growth amount that we can expect to see going forward as well?
No, in the past few quarters, if you were to look at from April onwards, our growth has been in good double digits, and we've been growing at about 17-18%. That's though I have given a guidance of 12% for the full year, but we've been continuously surpassing that guidance. And we are continuing to grow. Actually, we started growing our book after my complete rehashing of my asset and liability business, which got completed in December quarter of last year. We started actually growing our book only from December of last year. So we ended March 22, we ended with a 4% kind of growth, and the year ended 23 March, we are expecting to be at least 12 to 13% kind of growth in the overall asset. So it's been a growing trajectory for me right from the time we completely rehashed the entire business structure.
Mr. Ramakrishnan, we'll leave it at that. So South Indian Bank guiding for a loan growth of 12 to 13% for the full year, though they have been exceeding it. Gross NPAs to come down to sub 5%, net NPAs to come down to 2%, and the company is saying that the net interest margins will hold at 3.21% by Q4 FY23. That was the guidance they had laid out 3 months ago, and the company is reiterating that. Strong showing. The stock is up nearly 4% in trade. We will slip into a very short break. On the other side, as always, we'll discuss what's buzzing in commodities. We'll invite Manisha Gupta.